IMF chief economist Pierre-Olivier Gourinchas joins us now. It's good to see you. How encouraged should we be about this improvement in the global growth outlook?
Look, this is a piece of good news, and it's always good when we have a piece of good news. We have this slight upward revision in our 23 forecast from 2.8% to 3%. So there's a little bit less of a slowdown from last year. And, we should celebrate that. But at the same time, we shouldn't celebrate too much because, growth remains low by historical standards. And more importantly, what we're seeing is we are losing some momentum into the second half of the year. And inflation concerns are still there with us. Core inflation, underlying inflation pressures outside of energy and food remain quite elevated. So not out of the woods yet.
So there's currently a Federal Reserve meeting going on, first day of two, and we're expecting them to lift interest rates tomorrow. Are you saying it might not be a good time to end the hiking crisis after that? You still see inflationary pressures, and clearly the environment is improving. So would you like to see them keep hiking after tomorrow?
Well, look, I think that we can all agree that unless there is really bad news on the inflation front, we're very unlikely to see sort of the outsized interest rate hikes we've seen in last year. But having said that, I think it would be really too premature to ease monetary policy at this point. So whether they increase by 25 basis points or stay constant, but the important point is that it's going to have to remain tight for some time, because we have, in the U.S., for instance, core inflation is projected at 4.9% for this year. And, central bank targets are 2%. We're still way from home here.
But nobody's talking about easing until early next year. Are you saying the markets got it wrong when it comes to cuts starting in March?
Well, we're saying we're certainly not going to see any easing until sometime into next year. That's for sure. We might see some moderate hikes until then, and we might even see more if inflation surprises on the upside. We should not discount this. I mean, in fact, when we look at the inflation numbers, headline inflation has been surprising to the downside, but core inflation has been surprising to the upside. We are revising our core inflation projection not just for this year, but for next year as well. For next year, we're projecting 3.1% for the U.S. That's 0.5 percentage point up. So it's certainly no easing in sight well into next year. Yeah,
and it's not at target. And to Powell's point a few weeks ago to me in Portugal, he also doesn't expect to hit target next year. I'm curious, Pierre-Olivier, how China factors into your global outlook here, because that has been a disappointment so far this year on the economy side.
Well, China, certainly the rebound has been quite strong in the first quarter, but there are signs that it's losing momentum, and a number of data that has been coming in suggests that the second half of the year is going to be significantly weaker. Our projections for China on growth haven't changed from April, so we're still at 5.2%, because in part we're already anticipating that there might be some of this momentum might not last. The big change for China is we're seeing some downward revision in their inflation numbers. Both headline and core inflation are revised downward quite a bit, and that's one of the reasons why global inflation is heading down has been revised down in our new numbers is because of China's big downward revision. And so that is putting them in, their inflation numbers are close to 1% for the year. So that's fairly low. We expect it will pick up some into next year as consumption rebounds and as confidence returns. But probably the Chinese authorities will need to implement some measures to support the economy as well.
I'm surprised you haven't taken down growth forecasts since your April report, because most of Wall Street has been taking down growth forecasts as the data has continually disappointed. Why have you not?
Well, we were already a little bit lower than where other forecasts were. So in a sense, the rest of the forecasters have been aligning more with us than the other way around.